Hello, welcome back to all. Today's topic of discussion is priority sector lending. The Reserve Bank of India has issued new priority sector lending guidelines which came into effect on April 1, 2025. These guidelines are issued under the Banking Regulation Act 1949, clause section 21 and 35A, read with section 56. Applicability to every commercial bank, including regional rural bank (RRBs), small finance bank (SFBs), local area bank (LAB), and private primary cooperative banks, other than salary earners banks. Priority sector means those sectors which government and RBI consider important for the country's development and are to be given priority over other sectors. 1969 Gadgil Committee recommended the area approach, lending to the addition of the lead bank schemes. 1972 formalization of PSL aimed to ensure credit flow to sectors that were credit worthy but lacked access to institutional finance. 1982 Ghosh Committee recommended revision and reclassification of priority sector categories. Categories under priority sectors: agriculture, micro, small, and medium enterprises, export credit, education, housing, social infrastructure, renewable energy, and others. Enhancement of several loan limits. In the purpose of education, up to rupees 25 lakh for individuals. Social infrastructure up to rupees 8 lakh for borrower for setting up schools, drinking water facility, etc. Others like housing loan limits, agriculture loans. Expanded renewable energy loans up to rupees 35 crore of renewable energy based power generation and renewable energy based public utility such as street lighting system, remote village electrification. The limit is rupees 10 lakh for individual households. Revision of P.S.L target for primary urban cooperative banks. Total priority sector 60%, earlier 40%. Micro enterprises 7.5%. Advance to weaker section 12%. Expansion of the category of weaker section, including it now includes transgender along with earlier category of small and marginal farmers, distressed farmers, indebted to non-institutional lenders, artisans, individual members of SHGs or joint liability groups, scheduled caste and scheduled tribes persons with disabilities, monetary community notified by Government of India, individual women beneficiary up to rupees 2 lakh. Additional provisions: NBFC and housing finance companies (HFCs) on lending are now included under PSL. Co-lending module: banks plus NBFCs recognized for PSL eligibility. Securitization norms updated, excluding gold-backed loans from NBFCs. Trading of priority sector lending certification (PSLCs) allowed to meet targets. PSLCs are tradable instruments that allow banks to meet their PSL targets by purchasing credit achievements from other banks. IBFCs and direct assessment norms updated to ensure proper classification. Interbank participation certification. IBFCs and direct assessments are key instruments used by banks for managing liquidity and transferring credit risk. Priority Sector Lending Certification (PSLCs) introduced in April 2016 to enhance efficiency, allows bank falling short of PSL targets purchase PSLC from overachievers. For four types of PSLC is there. PSLC is there. PSLC for agriculture, PSLC for MSME, PSLC for general, and PSLC for weaker sections. Co-lending model (CLM) introduced in 2020 for NBFCs and bank to jointly lend in priority sector, improving last mile credit delivery. Recently, RBI proposed a draft framework for co-lending arguments between all regulated entities for all loans, priority sector or otherwise. Priority sector lending in India stands at a critical juncture of transformation. While the framework has successfully challenged institutional credit to underserved sectors. Over decades, its evolution now demands both structural reforms and technological innovation by implementing data driven credit scoring, integrating advanced technologies like AI and satellite imaging, reforming the PSLC market for greater transparency, and transition from input based targets to outcome based approaches. India can revitalize its PSL framework. Thank you.